name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Monday 2 weeks ago really started something. You see, it's not just the almost weekly key reversal up that was nearly made. It is the current ongoing pattern that it has started. What I mean is that as at close of business tonight, Friday the 30th of July, we are on the verge of making a monthly key reversal for July. If we close tonight either over 680 or under 667, then we'd be on. Anything in between and would have a lesser outside month. Right now we are looking at a possible monthly key reversal up in July. But there is still hours left to play out. Topside, we have immediate resistances at the October 2013 high at 721 and the March 2014 high at 725, as well as to a lesser degree the nearby June high at 708. Below we have a raft of supports, but seeing how quickly the rally happened last week, or the week before last I should say, I have suspicions about the value of all of them. Nevertheless, we have support at the January high at 693, the recent 50% Fibonacci line at 681, short medium moving average currently 674, the absolute 50% Fibonacci line at 675, and the 50% Fibonacci line for 2012-2015 at 670. Also the medium moving average currently 670 even as well, and the long moving average currently 650. Right now this week we've seen a pullback up off the 50% absolute Fibonacci line at 675 after the previous week's seemingly welcome period of hesitation following the prior week's run up. These actions have raised the question over what has happened in the past 3 weeks. Are we forming a possible double top or a possible bullish halfway hesitation? It is not clear as yet which, if any of the two patterns will emerge. We'll have to wait and see some more. In the meantime, it will be interesting where we finish up tonight. Chicago corn. 5 weeks ago, I spoke about how the 2021 uptrend, currently at 561, was and is, despite it being broken, an important uptrend. I'd highlighted 9 weeks ago and then 6 weeks ago its role not as a supportive uptrend but as another form of uptrend used in a bearish pattern. It was and still is looking at this uptrend to act more as a significant role for a possible bearish bump and run reversal top pattern. Even now, we may or may not be seeing the opportunity for a move lower. The key will be, as I said 8 weeks ago, and I quote, if it turns out to be a bearish bump and run reversal top, then we'll also see a pullback up, but then a turnaround back down and a possible fast move lower, especially if we move below the 520 level. Hence, it'll be interesting to see how far the pullback goes and if the market stays pulled back, end of quote. We were then approaching the key 520 level, but we've since bounced up again, seemingly negating the idea of the reversal top. However, the bounce was a false one due to changeover, and 3 weeks ago, prices tried to go down to the key 520 level. This time the support around there, the combined 2014 high and the 61.8% absolute Fibonacci line at 525, plus the May 2014 high at 522, were bolstered by the rising long moving average, currently 530, which had entered the market. Yet the rally back up was halted by that same broken but still significant 2021 uptrend. And right now the market has been carefully testing lower towards the long moving average. If, and it is still a big if prices move down and then accelerate below 520, then we'll likely have potentially a bearish bump and run reversal top. If that is the case, then you could see a possible target X down in the 450 area. A lot depends on what the market will choose finally to do. Now this past week has been another one of indecision, caught between the bearish bump and run reversal trend line overhead and the combination of the August which is not that strong. 2020 today uptrend, currently at 534, and its partner since late May, the rising long moving average. In addition, this week has seen bearish patterns, 2-day ones as well, countered by bullish patterns, which in turn have seemingly today been countered by possibly another bearish one. This inter-day level of indecision will not last, but it is a little early to say whether the bull or the bear will have the last dance here just yet. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.